Hello everyone, this is Taylor Bishop. Today I wanted to go over a market recap with the stock market and my trade for the day, and talk about some other things, what the Fed's doing. Take a look at the Treasury bonds, the 30-year specifically. Also talk about the real estate market, as I am a licensed real estate agent in the city of Virginia Beach, covering the Hampton Roads area. As you know, I think all of these financial markets are just a little insane right now, and it's kind of crazy if you ask me. You hear real estate agents in the real estate market telling, you see these YouTube videos talking about there's going to be a crash. No one knows when that will happen. If there is going to be one, I'm sure there will be a correction at some time, but no one knows. And if you look at the policies that have taken place recently, and the recommendations and by the government, this could be prolonged for a while longer. I mean, no one knows exactly how long this can be prolonged, but we'll go over that in this video. Please forgive me. This is my first YouTube video. Just having a decent amount of financial knowledge and how the markets work, I thought it would be a good time to maybe really start doing some videos and giving my opinions. And they are my opinions, so I'm not saying that you have to believe in them or agree with them. Like I said, they are my opinions. So this is not going to be the best quality video. As I mentioned, this is my first video. However, this is going to be raw, kind of uncut, and we're going to talk about what's going on. All right, let's start off with my trade for today. This is my CMEG account. Actually, I've seen all these YouTube videos talking about small account challenges. This would be my second one. I had opened an account in January with TradeVolt, or whatever they're called, and unfortunately they got shut down, and I did make $27,000 with that account, starting with $700. I'll pull that up another time. And this is my CMEG account, and this is my trade for today. I shorted GameStop here. This thing was totally manipulated, and I did not trade very well, even though I am up near $1,100, close to $1,100, but I got in short at the wrong times. I mean, I like to short when things are just totally overvalued, or if they've run up for 2 days. And sometimes I like to short penny stocks that are, running up on those, no news, and kind of being pumped, and there's nothing to back or there's no reason for them to be running up. And so I like to short when, and basically all that is a bull trap, and people chase, and then it just tanks. And I like when stocks fade. I like to short at the top. However, if there's a squeeze going on, I will not touch the stock, because I have been squeezed a few times in my life. And I am a short bias, but I do go long also. However, man, it's just, for me, it's hard to go long in a very overvalued market. Even though I'm kind of day trading here, this market just doesn't even make sense. To me, it doesn't. And like I said, this is just my opinion. Now, I like to go long when things have, with a company that does have some kind of, it's not just a speculative news, like a company that gets kind of beat down, I like to buy the dip, I guess you can say. GameStop, I would never buy this stock. I think it is just grossly overvalued. I think it's been manipulated and it's been talked about, and so new traders are, for some reason, and it could short squeeze again. I have no idea. This thing has been all over the place, but I think you're kind of taking a big gamble, and I probably shouldn't have touched this thing. But I do think it's time to really kind of come down here to reality. And even though it's dropped from 483 to 155, and it's been up and down several times before today, and it actually was down, I think, close to, I don't know, I haven't really looked at it, to be honest with you. It looks like 132 the other day. Could be off a little bit. However, I think anything over $20 for this stock is grossly. I even think $20 is grossly overvalued, in my opinion. I mean, if you go to any shopping center, you know, who buys games off a game? Maybe people do now because of the squeeze. I don't know, but you do look at the news, and the CEO could not meet production demands, and he had to forfeit, I think, several million shares of stock, and everyone knows that this thing is grossly overvalued. But you look at Webull and the comments by people on StockTwits, and you're just like, man, are these people out of their mind? I mean, they're pumping the stock, and they're not really pumping. I mean, I know that I would never buy it, but you know, you get some new guy in there that thinks, oh well, it was at 483, 2.5 months ago. Maybe I should buy it at 155. When, if you look at it, several months ago, it was down to 375, and then this squeeze happened. To me, it's insanity if you're buying this. If you're holding this stock and you got in before the squeeze happened, and it went to 483 and you didn't cash out, then I think you might need to find a new career. I mean, I don't even think I would have held it to 483, but if you didn't cash out and you got in in the double digits, or even the lower double digits, meaning that you got in at $10-15, or even way below that, and you didn't cash out on some of these big runs, to me, you are holding a ticking time bomb. And like I said, this thing might squeeze again. No one knows. This thing is totally manipulated at this point, and but I do see a lot of people on Webull and StockTwits talking about how they're going to get back at the hedgies and hedge funds and all that, and I doubt the hedge. Maybe they do. I mean, maybe they do look at some of these comments. But eventually, you know, this is going to come back down to reality, and I wouldn't be talking too much smack or necessarily averaging up or holding this stock. I mean, if it runs again and I had bought this stock and held, I mean, I would get out immediately. I just think this is due for a serious correction, but I mean, this thing is totally manipulated, and I've traded it a couple times, and you know, it's up and down and sideways, and you can tell there was manipulation earlier. I mean, this is after hours, so you can't, you know, really see what was going on during the market. But what would happen is it would go down, it would consolidate, and it would look like it's going down. And then the ask would be risen up real quickly, and there was a whole bunch of buyers down there waiting to pump it back up, and then that would happen for 30 minutes to an hour, as you can see. But then at near 1 o'clock, it started to go up, and I got in short because I thought maybe it would go down again. Maybe it was just a false. I mean, I wouldn't say false breakout in terms of on the 1 minute chart. However, I thought, maybe they're just trapping some people and it will go back down. However, it did rise up again, and then for a second there, I was like, man, maybe this thing is going to squeeze again, because I do remember, I can't remember the exact date, but there was a day, actually, since we got the chart up, maybe it was, I can't remember, it was one of these days in March. It was like right before the after hours. Hey buddy, sorry, that's my dog. Right before the after hour was coming in, and the thing just ran up and squeezed and squeezed through the after hour. So I thought, oh my gosh, maybe this thing is gonna have a random squeeze again, and we're gonna have to deal with this. I'm short, and I probably shouldn't have shorted this thing, but because I saw it before when I shorted, it consolidated for a little bit, and then bam, it went up. So anyways, my profits for today, I mean, I don't know how much it was. It's more probably like 900 or maybe close to 1,000 with the commissions and short locate fees, which CMEG does charge you a pretty hefty fee to locate shorts, but whatever, it's not the end of the world. I don't mind paying fees if I can make money. My other trades this week, well, I don't think, let me see if I have it up. No, I don't. But my profit so far this week is around 5,000 so far, and that was including yesterday. I did not trade because I am a real estate agent. I usually try to trade in the morning before going into the office or before showing houses. And today was kind of a lax day for me in real estate, so I didn't get to that point. So I didn't really have to be in the office, or I didn't really have to show houses today. So I probably traded past my regular trading. I usually try to get done trading by 10:30, because I feel like there is a lot of manipulation, and once 11 o'clock comes around, there seems to be a lot of it's almost like the algos come on, and you have no idea what's really going to happen, or it's just kind of choppy. So I usually don't like to trade. So I started this account with $2,500 after getting out of Trade Volt, and I said I'll do another small account challenge. And actually with Trade Volt I only started with $700, but with CMEG I did start with $2,500 to get that 6-to-1 margin. I know people, I like to trade with margin if you kind of know what you're doing. I'd say I'm a decent trader. I mean, I've only had maybe 2 losses in the last 60 days. One of them was big. I got squeezed on eyes for like $7 grand. I actually was up for the day $2 grand, and went back and traded, which was on a Friday and I don't know if you remember eyes. The first day it ran up, it was just totally manipulated. It really wasn't a clean short squeeze, and it did have news, and it was a low float stock. So yeah, I got squeezed on that. I shorted with 10,000 shares and just got totally smoked. and had to take I think really it was like a 10 grand loss, but I was up 3 grand, so I really lost 7 grand on that day. And then, but anyways, and then the other losses I had were actually with CMEG. I had 2 losses. Like the first 2 days I signed up, I had a win and then 2 losses, and so really I had to work my way back from 1,300, and now I'm up to today. It looks like I'll be up close to 16,700. So it's not bad in a month to make to turn 2,500 into near $17,000. Anyways, I will now move on to what's going on in the. And by the way, actually, I did not go over the actual stock market. Right? This thing just you had the job numbers come out and a couple other reports come out today, and I can't remember. Let me see here. I should have had that pulled up. I don't. Anyways, apparently we had a decent job reports number, and so this thing just kind of I wouldn't say squeezed up there, but the whole as you can see, SPY kind of just ran up. I mean, $4.25 went up 1% today. I can't, it's great and all that. We had the lowest initial job numbers that we've had since March of 2020. However, I don't think what people are realizing. I mean, you can look at it. We're not really adding new jobs per se, in my opinion. Most likely, these are people that were laid off and are now just going back to work, and so they should have been working, in my opinion, anyway. Not due to their fault, right? Obviously, certain states and local governments have really made it hard on them. I'm not blaming them. I disagree with their policies and for the reason of causing people to be on unemployment so long and have and to lose their job, etc. And to me, I think what the Federal Reserve is doing also is a joke. But anyways, so basically all these jobs, in my opinion, are people that are just coming back to work. It's not new job growth. Obviously, it's become lower, but are we actually in a strong economy? I don't think we are. I think we're actually in a cruddy economy. And the reason I say that is if you look at the interest rates, if we were in a good economy, the interest rates would be much higher because people could afford to pay those interest rates. But the interest rates have been down for a very long time, and the Federal Reserve is now saying that they have no plans to raise interest rates, and it looks like they'll probably stay the same until 2022. In my opinion, this is not good. We are going to see. I don't know if we'll get to runaway inflation, but you can see inflation really starting to show. In my opinion, you can see it in the housing market. You can see it in gas. Well, gas. Those are up there. There are other factors causing the gas prices to be inflated. However, I went to a restaurant the other day. I paid $12.99 for 8 pieces of shrimp. I mean, maybe that's not a lot in some places, but for this specific restaurant, I mean, I've been there many times. Not recently. That was my first time recently. But it used to be like $7.99 for that same meal or dinner or whatever you want to call it. And it's $12.99 now. And I'm like, Jesus. Well, obviously the restaurants have been hit pretty hard, so they got to upcharge to make sure that they can try to recover some of those losses that took place during COVID, and they still, have these crazy rules. At least where I'm at in the state of Virginia, we're not as bad as some of the other blue states like California or New York or Michigan and etc. But I just think this stock market and real estate market are just totally out of. I mean, look, I am not. I know I short more than I go long, and that wouldn't necessarily be the case if it wasn't for the just totally grossly overvalued stock market and totally grossly overvalued real estate market. Obviously, you can't short real estate, but I just think that this economy is just a false reality, and so the Federal Reserve is saying that they are not going to do anything about the interest rates or stop printing money basically until we go over a 2% inflationary rate and average, by the way, he said average inflation rate. So we're not quite there yet, but and he said he will do what, Jerome Powell said he'll do whatever it takes to basically inflate the market. And so anyways, I kind of do want to, talk about let's move away from the stock market. Obviously, if you're a bull, it was another great day. It seems like it's a great day for bulls every day. It seems like it's a never-ending pump. I say it's the never-ending pump market because I feel like this thing is just pumped and pumped and pumped and pumped. And honestly, it's, even people that are bulls should want some kind of pullback, because eventually when it does happen and you buy in at these crazy overinflated prices, you're going to be feeling sorry for yourself. And so anyway, so let's move on to the real estate market. And where I'm at in Hampton Roads, it is crazy, but I'm sure there are other bigger metro cities that are dealing with even a worse real estate market in terms of inventory and people putting over asking price and etc. So this is definitely a tough real estate market to be an agent, especially if you're a newer agent. It's definitely a tough real estate market. It's even tough for experienced agents. If you're a listing agent, I get more listings than I do buyers, but I do have several buyers that I am representing right now, and I got to tell you, it is tough, man. It's a lot of work if you're representing a buyer right now, and it's almost kind of discouraging to see some of these buyers go out there, put an offer, get their hopes up, and lose the crazy bidding wars that are going on, and do it again and again. And basically, one of the things I would recommend to buyers, and I've tried to recommend this to some of my buyers, is to really not try to be as, I see this with first-time home buyers. They get really picky. They want the nicest and updated, homes, right? They go in there, they want basically something that has been recently renovated or renovated within the last 2 years. And the problem with that is there's about 30 other first-time home buyers that are looking at the same thing, or regular home buyers, not just first-time home buyers. I'm not sure why I said that, but they want the same thing. But what you're not realizing is those people that have renovated the house, especially if it was an investment property that was flipped, those people are the owners are getting usually from me representing investors and working on many investment properties myself. A lot of these people are getting 3-to-1 for each dollar that they put in. Sometimes even more. Sometimes they only get 2-to-1, but usually 3-to-1. So for each dollar that they put in, they're getting $3 back. Sometimes even much more than that. And so if I was a buyer right now, and I was especially a first-time home buyer, most of the first-time home buyers in my area do not have the money to be putting down or putting over asking price. They don't have 20 grand, 30 grand, 40 grand over, even 10 grand over. They can, most of them that I've seen recently, unfortunately, don't even have enough to barely cover their closing costs. And so if I was a home buyer in that situation right now, and I had first of all, if I had a specific neighborhood that I was looking at, I would also have some backup plans. And I'm not, I try to explain that to people, but unfortunately, they are kind of set on one area. And I get that. You're buying a home, you want to live in the area. But I would also have some other areas that I was looking at, maybe close by, maybe just down the street, depending on where you're at and where you live and what city you're in. But also, my thing is to them is if you do see a home in that neighborhood that is kind of the same type of homes that are built in a specific neighborhood you're looking in, look at the ones that don't have everything brand new updated in the house. And what I mean by that, they're good enough to pass an appraisal inspection, and they're not in bad shape by no means, but maybe they have the old Formica countertops, or maybe they don't have all stainless steel appliances, and maybe they don't have brand new vinyl floor everywhere. They have old laminate. Excuse me. And maybe they have carpet down. Okay, well, you're most likely, I'm not saying there's not going to be some competition there, but it's going to give you a much better chance of not facing 10 offers the first day. Because when you're looking at something that has been totally renovated and updated and a lower price point, and you're a first-time home buyer, there's many other people that are thinking the same way. I think you have to think a little bit differently as a home buyer right now. Remember, you can do these things yourself, and I've even tried to explain to my buyers is that I'm friends with a lot of contractors that would cut you a big percentage off of some of the things that you might want to do after buying your home. And I get it, you're not going to get that in the financing, so you're going to be paying that out of pocket. However, you don't have to do it right away, but if you want to buy a home right now, think of it, kind of as a project. I'm not saying go buy first of all, you couldn't buy a home unless you had cash that was falling down and apart. I'm talking about something that's not totally updated, and people should really think about that as home buyers. They always go after the nicest thing on the MLS, and what I mean by that, whatever looks the nicest on the MLS, that's the ones they want to see. That's the ones I want. And I get it, but if you're thinking about having a chance of buying a home, if you see something in that same area, the same neighborhood, the same type of house that's not totally falling apart, go for that. You have a better chance, in my opinion. Sure. It might be still a little overvalued, but you're going to have a better chance, in my opinion, and from what I can see, than the homes that have been totally updated and have had all these changes to them. But anyways, the reason the real estate market is like this is For one, in my opinion, I think COVID really was a huge factor, obviously, and we've actually been in a seller's market across the country for a good while now. This is the extreme point of a seller's market. I don't think we've seen anything like this. And but we have actually been in a seller's market for a good while. I know last year in Hampton Roads we were considered to be in a seller. We were in a seller's market. However, last year at this time we had 50% more listings in inventory than we do now, and it was still considered a seller's market. So last year, I don't know the exact number off the top of my head. Actually, I'm going to pull it up for you if this loads quick enough here, just to give you an idea of what's going on. Well, let me see here. So the media. So here's just a good idea. So as compared to 2020 statistics, the number of listings in our market, Hampton Roads, Virginia, is down 55%. Excuse me, I thought it was 49. And the median home sales price has gone up 10.14% since last year. So it's $275,000, a little bit more than that, but that's including the whole Hampton Roads area. And where I'm in Virginia Beach, so that's the most expensive part of the Hampton Roads area. And so here you go. So excuse me. So the active listings is down 47. Let's say down 48% since March of 2020. So there was 6,800 listings around that active listings in March of 2020. There was only 3,500, or maybe that's crazy. That's insane. So we're down 50%, and actually it says 55%, and homes are selling in hours. This to me is not good, and the reason this is happening, in my opinion, is there's several factors for this, and one of them being last year. Obviously, we had COVID, but that when it first came out and the country shut down, it obviously was still a better real estate market than it is now. It was a more balanced market. I'm not saying it was a great market for home buyers. It was still a seller's market. But there was more to choose from last year, and I remember that, showing buyers homes. Like, there was a couple instances where there was multiple offers, and it was kind of tough. But man, this is ridiculous. And so one of the reasons I think this is happening, obviously, you have half the country that is scared to let people in their homes, and they have that right, and I understand that because of the COVID, and you hear COVID variants. You have Fauci going on the news every time there's some kind of report that the COVID cases are going down. He comes up there and, in my opinion, tells something totally different, and he starts spouting off on the mouth and saying, oh, well, this variant can cause more people to have this issue, and so half the country's scared to list their homes, and the other half probably doesn't care, and that's just one factor, in my opinion, and maybe we're past that factor now. However, the main factor is, obviously, there's just a crazy amount of demand for buyers because they think the interest rates are so low, which is great. And yeah, sure, but what good does low interest rates do if there's no inventory on the market and you have to pay 20 to 30 grand over on an overinflated house? And I'm not saying that there aren't, there are very, very few good deals out there. I have found some off-market properties that have actually been, pretty great deals. However, with the demand of buyers and the low inventory, the supply just cannot keep up with the demand, and so this is causing the market to just go higher and higher. Another factor, in my opinion, is, and this is kind of a future aspect. You see all these real estate agents going on YouTube saying the market's going to crash and we're headed for a correction like we've never seen and blah, blah, blah. Well, that may be true, but no one knows when it's going to happen. I mean, if you're saying that you know when this bubble's going to burst, you're lying, because you don't know. No one knows. And so, to me, there are several factors that could, I'm not saying it is, because I don't know, because no one is a fortune teller. I'm just saying these are some factors that could cause the real estate market to stay down. So there are 2.5 million homeowners that are still enrolled in some type of forbearance program, according to the Mortgage Bankers Association. And so these emergency protections for homeowners will start to expire later this year and by the fall, I think September to be specific. The CFBP is proposing changes to the mortgage servicing rules that will ensure services and borrowers have the tools and times to work together to prevent avoidable foreclosures. Well, to me, I mean, the foreclosures are I'm not saying they're good, or I really feel sorry for the people that do get behind on their mortgages, but it is a healthy part of the market. You can't sit there and say we're just going to block give everybody an opportunity to get out of their foreclosures. I don't think that is a good idea, and so I think that's a bad idea. I mean, it really is. And many of the current forbearance programs were set up in the CARES Act, and this is really going to kind of cause people. Why would you sell your home? And this is the main thing. I really kind of like, this is crazy. So the streamlining the process. This will the CFB says they would like to give people the option of extending their mortgage term, so having a loan modification for 40 years without any charges or any fees, and I don't think it's going to change anything to their interest rate. So if you add 10 more years to the 30-year mortgage that you have, that's going to reduce your monthly payments significantly. And so why would anybody list their home if they are going to have a significant drop in their monthly mortgage payment? It's going to, in my opinion, if this does happen, I think more people are going to have an incentive to stay in their home, and that's going to keep the inventory low. So that would cause the housing market to stay in this crazy seller's market. I'm not saying maybe this doesn't happen. I don't know, but it looks like there's a good chance that it will. And so if you look at that, plus the fact that Jerome Powell said he has no plans on raising the interest rates, the demand for buyers is still going to be there unless somehow all the buyers realize that this is insanity and the interest rates really don't mean anything. If the home prices just keep on skyrocketing and they have to pay out of pocket. Another reason I think a lot of buyers are getting beat out is, there are several factors. One thing that most people aren't talking about is second home mortgages are at a, I don't know if they're at an all-time high, but they're much higher than they have been in a long time. So you have a lot of people coming in from the big cities into the suburbs and buying up residential real estate, and some of these people might have great jobs and high-paying jobs. I shouldn't say great jobs, high-paying jobs, which allows them to come in and pay 20 to 30 grand over. And a lot of these people might have cash on hand, and cash is gonna, especially if you're putting over the asking price with no you don't need an appraisal at that point, and no home inspection. Why would any listing agent or homeowner take an offer for a FHA loan when they can get cash? And so that's why I think a lot of these buyers are getting beat. You have the second home mortgages coming up, so you have people from cities coming into the suburbs and cities that might be more expensive to live in, coming in and buying up homes. And they're also that is also a factor for why home prices are going up. And if you have cash, you have a quick closing, and most of the time you do. And so a lot of these people also buying the second homes could be speculating and hoping to turn some of these places into vacation rentals. And I know where I live, you see that in Sandbridge Beach, which is in Virginia Beach. I live about 5-10 minutes away from there. You can see the home prices have soared in that area, and there's low inventory out there, and so you do see a lot of people from New York and New Jersey, Northern Virginia, buying up homes with a second mortgage or cash and turning them into vacation rentals, which they're not familiar with the market down here and what homes typically go for. And they don't really care if they have the money, because in the summertime those places are totally filled up if you have a decent house up there, and they can make 80, 90, 100 grand gross, not net, gross income in 1 year. And so why do they care? And the bigger the house that is out there, and if right on that beach, you're good to go. And so although there's a lot of fees and taxes and stuff that go in that, so that 90 grand gross income might not be as appealing once you see all the fees. So you kind of look at this real estate market, you see what's going on. Landlords are getting kind of, in my opinion, screwed too, depending on what state you're in. So this COVID economy is basically all speculation. It's crazy, and you look at the stock market, this thing just never stops going up. And yeah, over time the S&P usually always does go up, but to me there has not been sure, there's been some pullbacks here and there, but man, the recovery is was so quick from COVID. And then and the Fed has a lot to do with that. I mean, they're not indirectly investing into the stock market, but directly investing into the stock market, but they're indirectly bailing people out, in my opinion, buying companies' bonds, and not to mention they go on you see Jerome Powell going on television and saying we have nothing to worry about, we have a strong economy ahead, which the Fed has always lied. If you look at when Greenspan was around, and before the housing market crash, he said subprime mortgages were okay. I mean, and there was nothing to worry about. And then you saw what happened there. And he also said kind of the same thing when the tech bubble crashed, and in the 1999, early 2000s. He said, well, basically, I think someone asked him about, well, is this a bubble? And basically what he said was, well, there's no way to know if there's a bubble or if something's going to go higher. And he kind of deflected the question and tried to say everything was okay. And, I do agree there's no way to know if there is. Well, there is a way to know that there is a bubble. I mean, there's indicators that go off. However, there's no way to know when the bubble is going to continue to expand and when it's going to pop. I mean, how could you know? I mean, if you look at the markets now, I mean, I don't think anybody could have predicted this. Maybe some people got lucky and did predict it, but you hear a lot of people saying crash, 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 and well, there hasn't been any because there's been so many things in place to prevent a crash. However, I think we're ultimately going to pay for it, and I think and it's not going to be the rich that pays the price for any type of crash. For any type of inflation, and I think if there is a crash, it will be due to inflation. And you know who's going to pay for that is the middle class. The middle class is going to pay for the inflation. Most of the rich people are going to have their money in assets, which that's another reason the stock market's up. I mean, I'm sure a lot of I know, I'm not sure. I mean, I know investors realize that if they invest into the stock market right now, it's a better place to have your money than in a bank, because if inflation goes crazy, which you can see signs of it now, and I think it's going to get worse. Why would you have cash? So I'm just thinking to myself, we're not at the term of any type of runaway inflation or hyperinflation. I do think we could be heading there. But anyways, these are just my opinions and my analysis. I could be wrong. And I'm not saying that I'm completely right. I see people on YouTube come out with these predictions and headlines, and they have no idea what they're talking about. They copy somebody else's video and basically copy what the other person said and put a nice little tag on it and act like they know what's going on. No one knows when there's going to be a market crash, and if there is going to be a correction, when it's going to happen. I think we're way overdue for one, but it just looks like the government is continuously putting in policies and coming up with these crazy ideas to prevent any type of crash. But eventually, the Fed is going to have to get some kind of return for all the things they're doing. And once that carpet is pulled and Jerome Powell stops this insanity that he's doing, I think we will have a market, maybe not a market crash like 2008 or 9, but maybe a correction. And so and what I mean by correction, not an everyday pump market. I mean I like the liquidity. I think a bull market is obviously easier to trade in, even when you're short, because the liquidity's there. Usually in a bear market, people are out. They get out, right? And so liquidity goes away, and once liquidity's gone, it's harder to trade, obviously. So so that is my 2 cents. I hope that you liked the raw video. I'm not going to sit there and edit this video. I think that would be kind of a waste of time. I don't even have time to do that. I actually, you know, really didn't have time to do this, but I kind of wanted to start making some videos here, and once I get more into it and I get some more people following, I will start making more videos that are much better than this. So anyways, I've had a pretty decent week, and this is just my small account, and whatever you want to call it, small account challenge, or I don't know. Most of those people that do one fail because it's really hard to trade, and but I'm up, as mentioned, close to $5,000 this week. Obviously, I could have probably made a lot more money, and my thing is, though, there are times where I have gotten greedy, but I'm not like a home run type of trader. I rather make $1,000 or maybe more than $1,000 a day, maybe $2,000, even $500 a day before I go to do my day job and be consistent than going for a home run and getting totally wiped out. And the times I have lost a decent amount of money in the stock market was due to going for home runs and using a crazy amount of margin, which I still do use a crazy amount of margin. But if I'm up $500 and I will hold something for maybe 5-10 minutes if I think it, there's a high chance of it going down. But if it looks like it's going to pop back up, I will get out. Today I didn't trade well, and that was for sure, but I'm still up $1,000 or $1,100. But I definitely took some risk and made some amateur mistakes. I'll admit that. I'm not an amateur trader, but that doesn't mean you can't have days where you make mistakes. So anyways, I hope you enjoyed the video. I think I talked about a lot of important things. This might not be the best and most edited video in the world, but hey, look, I'm just coming off the top of the head. I pulled up a couple things. I did know about these things already, but just being in the real estate market and being in trading on a daily basis, I'm familiar with the markets. So anyways, good luck to everybody, and I hope you enjoyed the video and got some good information out of it. Thank you, and I hope to hear from you next time. Thank you.